right. That's it. Guys, I just want to make 100% sure that you can in fact see on the screen there the personal income tax calculation. It says at the top there with my logo. Just a quick yes, you can see it, so I can continue and not worry that I'm talking and you can't see what I'm actually saying or talking about rather. Okay, cool, thanks. All right, so guys, just first off, why did we come up with the tax tool? Well, we also run a tax practice, and in that tax practice, we work with financial advisors. And one of the value propositions that we give back to, or that we actually offer financial advisors when they refer their clients to us, is to highlight certain opportunities and risks and things that might exist just from what we can see in a client's tax return or in their tax assessment. Now, what inevitably happens is that, if you need to give feedback so often, then it becomes tedious really on the one hand, and on the other hand, it's very time consuming. So what I did was I came up with the tax tool, and what it's really meant to do is, and there's this misconception that you have to be a tax practitioner to use the tool, or that you have to be registered as a tax practitioner to use the tool, and that you have to present to clients, or that you need to offer tax services to your clients in order to use the tool. And in fact, that is the absolute last thing that this tool is about. This tool is really about, how can you utilize tax? Because I'm huge on that. When we do financial planning for clients, we cannot leave out the tax aspect of the planning. A lot of advisors tell me that, I would rather leave that to a tax practitioner. That's not my area of expertise. But then I also ask the question, like, if we are doing investment planning and retirement planning, how do we not account for the tax appropriately? So we do need that level of knowledge. It's not to say that you have to start a tax practice and complete tax returns and give opinions and things to that effect. But the whole idea is that, there are so many opportunities lurking in a tax assessment. And that's what I want to show you today, is that's really where the opportunity is. And there's sort of one of two ways that you can go about it. You can either give it to us to do the analysis for you, and we charge a fee for each analysis, or you can just purchase the tool and do it yourself. Now, I've got a client in Durban, and this is where I learned that people have this misconception about the tool. When she sent me some stuff to help her with, I used the tool, and I actually sent her back the report that the tool generates. And then she immediately, like, the email went through. 5 minutes later, my phone rang, and she said, "Is this what the tool does?" I said, "Yes." She said, "I have to have it." Now, I was obviously very happy. But then what happened is she went on and she charged her first client a fee to do this analysis. And she made more than double, or almost double, what I charged for this tool with her very first client. And she's obviously not afraid to charge fees or to charge clients for certain work and certain analysis. For me, it's not about, it takes me 5 minutes to do an entire analysis. It's not about the time you spend. It's about the value that we unlock through this. And that's really what the tool is about. For me, it's more about how do we enable more business, and how do we unlock more business for you in your practice. Now, I'm not going to go through the whole spiel today about, how everything fits together and how you can work with tax practitioners, or how you can incorporate tax into your practice. That's usually also part of the demo. But today, I just want to get to sort of the crux of what this does, and how you can actually use it, because it's very interesting how people use this tool all over, because there's so many people already using it, and they've each got their unique way of how they employ it. All right, so just very quickly to show you what the tool looks like. It's built in Excel, although you'll see that the tool is really customized. So you can't see any of the Excel sort of menu items. And even if you go here to File, you will note that you can't do anything but print. All right, so that's the only thing that we can do there. We've got this row at the top. This is not just a tax analysis. We also allow you to play with retirement fund contributions. So I'm going to show you that quickly. We do all the lump sum retirement tax calculations. Then there's also a CGT calculator. that you can use for if somebody's making regular withdrawals from an investment and you just want to sort of track the base cost and see what happens. And then transfer duty and transfer costs, we've updated this in the latest version, and I will just show you what that does. And we are constantly building in new features, and that we've got a whole list of things that people have requested for us to do. And as time goes on, we're building more and more of those into the tool. Then we have a full tax report. That's the real powerful report. And not to run things ahead, but the whole idea with this report is that my biggest problem, and those of you, sorry, maybe not all of you know me. I see there's some new names that's here today. I work with financial planners and financial advisors. Do a lot of training, and we also do consulting, and then I also help a lot with technology. I'm very big on technology for financial planners. So all of the systems that you know, we work with them and help people get the most out of those systems. And one of my issues with these systems is that what they're really doing is they are, the output that they are creating is really like put together for you as a financial advisor. It's not really aimed at the client. And you still need to go and sit and sort of come up with something that will, when the client reads it or when you explain it to the client, that they would actually get it and not be feeling like they're in an IT meeting where we're talking abbreviations. So from that point of view, when I created this report, I had this in my mind to say, well, when a client reads it, it must make sense to them, and they must get it immediately. So it's really a client-friendly report written in a way, in plain language, in fact. All right, so let me quickly run you through the tool. So this is the personal tax tool, and this is the main sort of component in the tool, because a lot of the other things will feed, or not all, like the retirement fund contributions will feed from here, the reports will feed from here. So this is the main part of the tool, and it's really got two sections. On the left-hand side here, if I can call it the left-hand side, we have just all the information that you would get from a normal tax assessment. So if you have a copy of an IT34, you can just use that and populate it directly from here. And it doesn't even matter whether it's last year's IT. It doesn't have to be the latest one. So even if we, in this case, using the 2019-2020 tax year, you can use the 2018-2019 assessments, if you will, that we're going to be doing now, or even the 2018 ones, because all this is we're not like trying to calculate the tax specifically now. What we're trying to do is to unlock opportunities and to highlight certain risks for the client. So even if that data is a little bit old, you can also adjust it for inflation if you want, just like we would do with any other normal planning scenario. You can do that, but you can also use this tool to calculate the actual tax payable by a client as well, because it is 100% correct. All right, so let me run you through it. I've put numbers in here already. What is important here is the current age of the client and also their planned retirement age. So this is just for the calculations. You can set your own assumptions as well. So there's drop down. So it's not a free text box, but it is a drop down where at least you can choose some percentages. And then importantly, to indicate how this person is married or if they are not married, because that does influence certain things, and the tool will take account of that. All right. So I've got here a salary. So everything, obviously, when we work with tax is annual. So you go salary, there's a bonus, there's overtime. We've got the retirement fund contributions by the employer. So this is where the employer is making contributions on behalf of the employee. And this excludes the contributions that the employee makes themselves. And then medical aid contributions by the employer as well. Then we can capture all company card details. So it's a simple button. You can capture up to 2 cars at this point in time. And, everything that you need here, the tool will then calculate what the actual taxable fringe benefit is. Now, why did we do it like this and not just leave it as an open field that you can just complete? Well, because when we calculate the maximum retirement fund contributions, it is crucial to have the exact correct numbers. And that's why we are really doing all the calculations. You put in all the information, and then when we tell you, listen, the maximum contribution is 50,000 Rand a year, you can know that it's 50,000 Rand a year based on that year's information, or at least based on the information that you have entered. Then if we just go down further, all of this first part where you can see these codes, that is all remuneration driven. So these codes you'll find on the IRP5 of a client. And then just to make it easier for you to know which lines go where. But as long as you know that this first part with the codes, that's remuneration. Again, important for the retirement fund contribution calculation. Then we can also enter business income, other income that you may have, and then rental income. You'll see we don't put it here on the side. From rental income downwards, we go to the left. And that's simply because these amounts get split when you're married in community of property. So the tool will do that automatically for you. And in this case, it's checked. It says that we are unmarried. And I can show you, so you can keep an eye here on what happens to the values. If I go, I'm married COP, so in community of property, it still shows the full value, but it then halves it and then just use half of that value. So it does all of that for you. All right. Then also tax-free investments. So this is something we initially left out. If you look at older versions or the very first version that we had, we didn't have tax-free investments in here because, it's an in-out situation. It doesn't really matter in terms of the calculations. But we then built things into the report where I needed to put that in. So I'll show you how cool that is when I show you the report just now. So then the exemptions, all of these exemptions, the first 4 up to the tax-free investments, the system will calculate for you, and it will apply the various maximums and things that may be applicable. So if I can show you the domestic interest, this person had 30,000 rands worth of domestic interest. So it caps it at 23,800 because they are younger than 65. When I change it, so COP, then obviously the interest halves to 15,000, and you'll see that the domestic interest is capped at 15,000. So you don't have to worry about these exemptions. So exemptions that we know, and there are formulas to calculate them. The tool will do that for you. But we've also left the section 10A, 10C, and other exemptions. I mean, any other exemption that may apply, you can just put into any one of these 3 boxes to apply them. So there's also a lot of flexibility in terms of the tool. Then in terms of deductions, you can enter the section 11A. At the moment, it's just the total amount. In future, we are planning to have a button here as well where you can either just put in a total amount or you can capture the expenses separately if you wanted to. I don't really see the need for that, but if where tax practitioners use the tool, it's great for them. So we will allow you to just put in a total or to do the detailed sort of capturing and do whatever is best for you. Then you can include losses, etc. Then home office expenses. Again, it's a button. It's a form that you complete. It calculates what the home office expense is, and you just go back. So everything works with buttons, and it's very, very quick to enter. I mean, I can tell you that some of these analysis, I mean, even if it's a comprehensive one, takes me really more than 5 minutes. But I do know the tool very well, and also the clients that I work with, I know their things well. So obviously that helps. But it's a quick tool to use. It's not this lengthy thing that's going to take you 3 hours to do. Then you can also enter the pension fund and provident fund contributions made by an employee, and also the retirement annuity contributions. And we've even got place for excess rollover contributions where somebody contributed more than the limit and they want to carry it forward and they want to deduct it in the next year. So the tool calculates, it takes all of that into account, it calculates it, and then checks the limits, whether we need to limit the deduction or not. Then also donations. The one thing I do want to show you is just how quickly, like medical expenses, again, it's just a little form. So let's just say the employer here paid 20,000, which remember we captured under the income, paid by you. Let's say the client also paid 20,000. So that then gives us 40,000. And here you'll see the 6A, 6B credits. And we've got these little, wherever you see this little red button, there is an explanation. So the 6A credits is for belonging to a medical aid based on the amount of members and the number of members. And then 6B would be additional credits that you may qualify for. Here again, the additional qualifying medical expenses. So this is medical expenses not paid by the fund. but not everything can be claimed. So those vitamins and those USN supplements, you can't claim that. So we've put in an explanation there to help make that easier to understand. But let's just say there was 10,000 of that. Then we need to say how many members were there on the medical aid, and let's say there were 3, and you just click on fill. If it's all the same, you can also do that and say, well, from month 9 onwards, there were 4 members. Okay, and you'll see as you do that, it just updates the 6A credits. It calculates that for you, and then the 6B, this person doesn't qualify for any of those. All right, and then what we've got is also capital gains. So at the moment there is capital gains, but because there's now marriage COP, let me go change that. It is now saying that there is no CGT. So let me go back. So here you can see that we just entered unit trusts, 200,000 and 150,000 base cost. It calculates the capital gain, and then it says that there's 4,000 Rand that's taxable, and it'll automatically include that into the tax calculation for you. And then also travel allowance. This is also awesome. So again, 2 cars that you can do. This is where somebody receives an allowance and not a company car. And also this is an allowance and not when you are commission driven. When you are commission driven and you want to claim for that, this happens over here. So you see there's also travel costs. So here we talk about travel allowance, and there we talk about travel costs. So somebody working on commission or has got their own business, they need to use this entry point here and not because there you can only claim actual costs. So you can't use the DIN cost table, which the travel allowance does. All right, I must be worried that I don't get too technical there. Anyway, so the taxable income, then it calculates that for us. It calculates the tax payable, and you can see this is the gross tax payable, the whatever rebate is applicable, and then the medical tax credits that applies as well. You can ignore this future value here. Previously, we used the tool to actually illustrate tax into the future. So, but you can just ignore that. I see I need to take that out. Anyway, so then you can also input the tax that's already been paid during the year. And you've got your pay as you earn, which if sometimes somebody's got multiple RP5s, and all you'll do is add them together, put in one amount. And then also if there were provisional tax paid during the year, you can also enter those amounts, or you can just enter one amount for everything. It doesn't really matter. Remember, this is not something that's going to SARS. All you want to do is just use the right numbers in order to generate a report for the client. And that's really where the power is for this. Now, in this case, you'll see that there is a 18,000 Rand refund due to the client. So it'll say refund due, or it says payable by you, or it will just say, there's nothing payable if the in and out is the same. We've also added now in the latest version an annual disposable income after tax. So meaning that if your gross income here was 860, after tax you're getting out 620, 628. And that's just what it's really helpful for financial planning to have that number available. Then very importantly, what we found is that with F&As, sorry, I just want to watch the time. So what we found with F&As is that a lot of the F&A programs do not calculate tax, and they ask you to enter an average tax rate or an effective tax rate. And then what most advisors do is that they use the marginal tax rate for that. And in this case, which would be 41%, meaning that you look at, and even worse, what they do is they look at the gross income of the client and then say, where does that fit in? Oh, it's a 41 or a 45% or a 39, whatever tax bracket. But if you calculate the tax through the bands and you first deduct everything that can be deducted, in other words, you're reducing that taxable income. In this case, the effective tax rate is only 24.4%. Now, if you were using 41% in your tax calculations and it should have been 24, that makes a massive difference in the shortfall. It totally sort of exaggerates the shortfall. And that's something that we don't necessarily want to do. So it's very important. So this tool really helps you to calculate that effective tax rate that you can use. And even if you then use a 30%, for example, just to be safe, you are still better off than when you were using 41% in this example. All right. So that is what it takes. Here on the right-hand side, you'll see that there's space for, I can put in amounts. And you can, in fact, even put in a formula there. So this is just some space for free calculations, and you can put descriptions here on the side if you want to. So it's just a little area where you can actually do your own calculations to help you. All right, so now that we've done this calculation, by the way, any screen that you can see, any screen that you can enter here, you can print or PDF. So you'll see the print and PDF buttons here at the top. If you print it, it'll go to a printer, and you can even then choose a PDF printer if you want. But if you go export your PDF, it will create this as a PDF in any event. All right, so let me show you the full tax report. As I said, this is really the power. It's not the inputs. You know, many of the F&A systems, planning tools, call them what you want, is they're all sort of the same in the way that we work with them and enter input and things to that effect. But it's the outputs that really differentiate one system from the next. So in my opinion, what we've done here, it works, and we're also open to feedback and ideas and things if you want us to, you know, where we think we can do the layouts better and we can give more appropriate information and use even plainer language. I'm quite keen to hear from you. Anyway, so you can customize this completely. So it's as simple as right-clicking, saying change picture, and go and choose your own logo, and it will replace this with your logo, and that's fine. The entire system is customizable. Nowhere on the report will it say anything about me or my business. It's all about you, so it'll have your logo, your information, and where you would update this information is here on the right-hand side where it says update your info. And what happens is it brings up a little box, and you can update it or you can change it. When you open the tool for the very first time, it will in fact tell you that there is no information, so you need to complete it. And this is where you can update it then afterwards. All right, so the first page sort of is the cover page, excuse me, and then the second page will be just a summary of the tax, so high level. So what a lot of people do, and this is exactly what the summary report, by the way, looks like. So it's just the cover page and this page. And what you could do is you print this, and then you can print the personal tax page where you entered everything, where all the detail sits. So you can then use the two together in that instance. All right, so just as I said, high level just gives you the gross income less the exemptions. So just basically following the tax payable. It says what is due to you and what is your annual disposable income. So very nice information for a client. And then what you effectively paid in tax. So here we're just explaining the concept of effective tax rate versus marginal tax rate. So we're just explaining that out and just putting it into rands to say, well, for every 1,000 Rand that you earned, you paid 244 Rand 60. I see there's a cent we can fix there. 244 Rand 60 for every 1,000 Rand that you earned. Then we get into the tax and financial planning opportunity. So obviously, I mean, as we would expect, I guess, we start off with the retirement fund contributions. And let me just go through this with you quickly. It says, according to the current tax year's information, you can save an additional 14,648 Rand per month into a retirement fund to receive the maximum tax benefit. So if you have to be very technically correct, it has to say an additional per month into an approved retirement fund. But remember, this is aimed at clients. This is not aimed at us technical people. So alternatively, you can pay a once-off amount to your retirement fund of 175. So even if you want to do the ad hoc payments in February, you can use this tool, do the calculation, and then use this annual amount here or once-off amount to pay into the retirement fund of their choice and to make use of it for this year. Should you save the additional amount, in other words, if we are saving the 14,648 Rand a month, you can save tax of approximately 70,440 Rand. Now, what's very important here is to note that we didn't take this amount times the marginal rate like most tools do. We actually did a brand new calculation because once you change the contribution to a retirement fund, it actually changes the some of the limits and some of the things that you can deduct elsewhere. So it will influence your medical tax credits. It may influence your donations tax. There's a couple of other things that it may influence. So we do a brand new calculation to get to this amount, just assuming that you are implementing the maximum the maximum contribution that you could. But then if you do this, so you are saving the 14,648 Rand a month, and you do this every year, then you have additional capital of 12 million at age 65. So this is a future value. This is the value at there, and this is based on the ages that you put in, as well as the assumptions that you chose on the personal tax tool. But then we go further. We say, well, to boost your retirement savings, you should also actually invest the tax that was refunded. Because what a lot of people do is they contribute 1,000, they get 400 back, and they say, oh, I only paid, it only cost me 600 Rand. But for me, that's not effective. What you should really be doing is when you get your 400 Rand back, invest that as well. Now you've invested 1,400. That is really then boosting your retirement. Spending the money that you get back because of this, I think, is a lost opportunity. So that's also something that we need to tell clients beforehand, because they plan ahead and they spend the money even before they got it. So that's important. But now if I go and I take this tax that I'm saving, that's 70,440, and I invest that as well every year, I can have even an additional, in this case, almost 5 million Rand, so 4.9 million. Meaning in total, I can have an additional 17 million Rand just by implementing this change. And that equates then to 866,000 Rand. This is at a 4% income just before tax. So an additional 866,000 Rand a year. So I think this is different from the way that we show clients usually. And we tell them that you can save this and you can save so much tax, but we don't really show them what is the outcome that they may have. Obviously, this is all illustrative. So that's on the retirement fund side. Before I go to the rest, what you can also do is the next button next to personal tax is the retirement fund contributions. Here we've got your current contribution. So this is just reminding you of what's happening at the moment already. Then you can say, well, what is the maximum, which is what we see on the report. But then we can choose any amount in between those that we want to actually contribute to the retirement fund, because now the client says, well, I can't do the 14,000. I can only do whatever other amount. And then, as you can see, 17,315 a month. So there we can, so let's say I can only do 10 extra a month. Then it will do, again, a brand new calculation for you. And it will say, how much do you need to increase your contribution by, etc. And also then showing you what the effect is. So instead of getting the 17 million, you only get 8.7 million extra. And instead of 866, you're getting 350,000 Rand a year extra in income. So this tool works very nicely with the full tax report. And then we've got the capital needed to replace your net income. So this is also a unique feature in our tool or in our report, to say, well, we had a look at the assessment, and then we asked ourselves, okay, so of all of these items that are on the assessment, when this person passes away, which of these income streams would the dependents still need? And that's different for death and for disability and for retirement. But we use that as a premise to go and see, well, when do we need to include the employer contributions and when not? When do we need to still include retirement funding and when not, et cetera, et cetera. So we then run through it, and the system comes up to say, well, after tax, you will lose 506,000 Rand a year. So of the 860, whatever it is that you were earning, in this instance, you are losing 506 in cash. This is money that was going to hit your pocket that is now lost to your dependents. And to replace that for a period of 5 years or 10 years or 15 or 20 years, escalating at inflation and all the wonderful things that we do, this is the amount of capital that you need. So it's so easy to say, well, do you have this much life cover? It's just like a quick check. And then we also just ask about, but what about your estate and your debt and your costs and estate duty and all those wonderful things? And we're just really planting seeds. This is not an F&A. Just let me be clear. This is not an F&A. This is just like planting seeds and really opening up the opportunity for deeper conversations. And a lot of times when I speak to advisors, they say, yeah, I need new reasons to speak to my client. I can't be speaking to them about the same things over and over again. This is a lot of times new information, and also a new way of presenting information to a client. In other words, saying, listen, we need to sit together. I had a look at your tax assessment. I identified a few things we need to get together. Very few clients is going to say no to that. So the disability works exactly the same, except that we just go until your retirement age that you've chosen. So there's no like for 5 years, 10 years, 15 years, etc. It says that you need 9 million, and in this case, you will lose 558. And then we also say that you can use income protection, etc. When you retire, we basically do the same thing, and it just says, well, to replace 70% of your income, 85, 100%, and then how many paydays have you got left? So again, just some interesting information and to maybe create some urgency with clients. This I didn't do. The tax and financial planning opportunities, is it possible to restructure your remuneration? Certain items that you complete on the tax tool, the system will check. And if your possible deduction is actually larger than the allowance that you received, you will be limited to your allowance, meaning that you could have deducted or reduced your taxable income even further, but you lost out on that opportunity because the allowance is too low. So then there's an opportunity to reduce your salary and increase this allowance on the basis that everything is fairly sort of constant, and that it continues in the same vein every year. So you travel the same amount of kilometers, etc. You drive the same type of car. Your business kilometers as a percentage of your total kilometers is more or less the same. So in that case, the tool will actually show you like what you can do, and it will also then compare the before and after and make a recommendation whether it's a good idea to do it or not. So this is a very powerful section. I actually should have included some information to show you that, but that is what it is now. All right, so then other opportunities, and this is where some of the information that we may think is not really necessary, it really comes into play. So it looks at your interest earned, and it says, well, you earned interest in excess of the exemption. More efficient investments may be available to you. It's just like, and especially if you see like large interest amounts on a tax assessment, clients may not tell you about all of the investments that they have with the net banks and the Investex of the world, but they can't lie to SARS, because these days SARS tells them what they've got. And this year in the tax returns, they will actually include the interest already for you. So, the same as what they do with your medical aid stuff and RA stuff at the moment. So it does not seem that you're utilizing a tax-free investment. Why? Well, because we didn't capture anything there. So therefore, the tool says, well, it doesn't look like you're doing this. You can invest up to 33,000. So just creating that awareness and educating at the same time and opening up an opportunity to do something. And I know like the ongoing fees on tax-free investments are huge, obviously. So I know it's very lucrative, and that was a bit sarcasm from me. But so I think it is an opportunity. Sometimes we just need to start with one thing, and it leads to the next and the next. Then also in terms of the medical aid, one of the things that we found when I still gave advice, so I'm not an advisor anymore, and we used to look at the medical aid and say, well, I found that a lot of people were, let's say, on Discovery on Classic Comprehensive, and you ask them why, and they say, no, just in case. And a lot of the times they could do that because the employer is paying half of that contribution. So it's still expensive, but it makes it more affordable to them. But nobody's sick. They haven't got any issues. Nobody's got any chronic conditions or anything. Then there's an opportunity to say, well, but why don't you just drop one plan? Just go down one level, and let's see, what was that Classic Saver, I think. You went the amount of money that you saved and that you could do other things with, pay off your debt or save, or rather pay towards your retirement, etc., was phenomenal. And that's really the idea with this section, is just to say, is this medical aid plan appropriate for your needs? It may be a too low plan. It may be very well be a too high or too expensive plan versus what you need. So that's one of the things, and it also then obviously asks about gap cover to try and open those opportunities. Then a very nice feature here is that you can make additional notes. You are able to go and type your own story about anything that you want to highlight or things that you want to bring to their attention or anything like that. And then we do end off with some important notes, just to say that, listen, this isn't an F&A. We don't have your assets and liabilities, your incomes and expenses, and all those things that we need. So this is really just for information purposes and just to make you aware of certain things that you maybe need to look at going forward. All right, so that is the full tax report. The summary report, the summary report looks the same. As I said, it's just the summary and the additional notes and then some important notes. There is no financial planning opportunities or anything to that effect. The retirement fund lump sum, you will never get it wrong again unless you put it in the wrong place. So let's say a lump sum of 1.4 million. It's done, it's calculated. So it'll say 1.4 million. It calculates correctly the aggregation rules and everything. Will tell you the 256,500 that's payable, and then your net lump sum. So what will you get after tax, and then also what the effective rate is that someone is paying. If there's then a subsequent lump sum, let's say of 200,000, again, it will aggregate. So it will add them, do the calculation and tell you, well, that on this 200,000, there's 72,000 Rand payable, and it's at 36% because now we are into the top bracket there. And it just continues like that. You can also enter any previously received amounts here according to the dates and the type of lump sum that was received. So it does all of that. This is the lump sum / death tax table. And then the withdrawal lump sum looks exactly the same. The only difference is that obviously it's the first 25,000 and the bands are a bit different in terms of the tax payable. Then in terms of CGT, this just follows the base cost. Then we've got so let's just say you invested $1 million. You can make ad hoc or repayments, and let's just say that there's a withdrawal amount, and the withdrawal amount is 200. Okay, and the investment value at that point in time when you are making the withdrawal, let's say is 1.3. Okay, it will calculate the base cost of that withdrawal and give you the gain, and then the base cost balance. And then as you continue, so let's just say I make another withdrawal of 100, and the investment value is 1.2. You will see that it calculates and it carries over the base cost, because the base cost you can never claim more for the base cost than what the actual initial investment was. So if there are repayments or ad hoc payments, then obviously the base cost will increase again. So let's just say that in this year, there was also a 50,000. You will see that it influences the base cost. So it's a very simple but effective calculator to just, if you want to know, like if you know there were multiple withdrawals made, whether it's a second-hand endowment or a unit trust, and you have those values at the time when they made these withdrawals, and you want to know there's a new withdrawal that the client wants to make, and you want to see like what the CGT may or may not be, you can use this tool for that. Then lastly, the transfer duty, very simple tool that I've built. You put in the value of the property. So let's say you're buying a 2 million property, and the value of the bond, you're not going to bond the entire amount. You are only going to bond, let's say, R1 million. You had R1 million in cash that you could put down. So it will then go and calculate the transfer duty payable for you, the transfer cost payable, as well as the bond registration fees. And this is the total payable, including VAT, for that. All right, so very, very simple tool. Maybe one or two comments about how are people using this tool. They are really using it, like, as I just showed you, to open up the opportunities. But I personally also use it when I do planning for advisors, for their clients, to start comparing different investment options with one another. You know, it's very easy if you go to the personal tax tab to say, well, let's say now I have an investment that's going to, and I put it into money market. What is the interest on that? And you put the interest with all the other income, because that's the problem. A lot of times we look at investment planning and we only look at that investment in isolation. But what about the other income that they're earning, and how does this all then work together, and what is the tax going to be? So this tool will show you exactly what the tax is going to be. And then also, what was the other thing? So if we are looking at interest, or maybe versus let's say some guaranteed income plan, that a big portion of it will be exempt, and to show and to look at what the difference is in the tax, you can use the tool for that. All right, so I don't know, is there any questions or comments? I can show you quickly as well, just before we end, what the report looks like. So if I go to the report and you go export to PDF, very, very simple. Excuse me. Let me just wait for the system to open it. All right, and there you can see it created. It gives it the name that you've put in, so I'd use all of that to already name the file. And this is a normal PDF that you can email, you can print, you can save it to Dropbox, you can share it, whatever you want to do with this. It's a plain normal PDF file. And then you can also obviously print it out to paper if you wanted to. We also have online documentation. So if you click on online documentation, it'll take you directly to the support page on the site, and it will show you, step by step, every single tool, every single field, with pictures, with step by step. As I said, you can watch it there. And we will, I guess, in the next month or so, we will launch the online training for this version of the tool. So when you go to that, you get a step-by-step online training program that you can follow as well. You can also contact us or send us a suggestion directly via the tool. So everything is basically automated as far as that is concerned. And then, so let me see. So Terence, I've asked before, apologies to repeating. Purchasing the tool today, do we pay the full price to buy each year with updates? No need to read out if you No, so I'm getting to the pricing now. I'm going to show you a slide quickly on the pricing, and I will explain the pricing to you. So the first thing here is that you obviously can get a free trial. So it's 15 days fully working. You can use it for full days. There's no restrictions, no anything. It will just expire after 15 days. You can get the full experience. You can even update the logos and everything that I've showed you. So you're welcome. There's the web address that you can use to get a free trial. Check it out for yourself. And if you've got any questions, you can just shout and let me know. And then the price. So when you are a first-time customer, in other words, it's the first time that you are purchasing the tax tool, the cost is $2,500. Then that is for, and none of these versions ever expire. So once you've bought it, number one, this version, so the latest version will work forever. It'll just automatically become outdated because of the tax years, etc. So that will happen, but you've effectively, as a financial planner, if you do financial planning and tax, you'll have 2 full years of use of the specific version. So what we also do is, like, when you purchase the latest version, we give you all the previous versions as well. So the 2017-18, the 2018-19, and the 2019-2020 version. So you get all of them. They're all fully working. Sometimes you do get people who have things that are in arrears, etc. So in that case, you can do that. So that's the first year. Next year, so we had our first clients and users renew this year. And when you renew, so if you are an existing customer, you get a 40% discount on the retail price for that year. I haven't increased the price at all, and I don't foresee really, but you never know. But we are doing that. So in other words, if you are renewing, if you already have the 2018-19 version and you want to renew, it's going to cost you $1,500 and not $2,500, and that's an annual or once-off price for a specific version. So every year what we do is we launch a new version with the new tax tables and the rules, and whatever changed, we built that in. And we also launch new capability and new functionality. Anything we change and update during the year, that we don't charge for, obviously. So you'll just get an email to say, listen, the latest version is available. You can download it from the website, and you can then use it. Also very important just to note quickly that this does not work on Mac. So if you have an Apple and you have the Mac OS, it does unfortunately not work, because the Excel version for Mac is different from the one for PC or for Windows. So yeah, cool. So let me see quickly. Ryan, do you have a data gathering form available so that if clients would like to receive a full tax report, they need to send us XYZ forms? Ryan, no, but that is an excellent idea. So I'm making note of that. I will put something together. So not yet is the answer then. Thank you very much for that. It's a brilliant, brilliant idea. Where have you been the last 2 years, Ryan? Thank you for that. Then Arun in the Q&A is asking, Francois, just go through saving method. Okay, yeah. So saving, I can show you this again. So what you can do is when you want to save this, what's very important, because what we're trying to do is to preserve the main file that you've got so that you never get to a situation where you stuff up your main file basically. So what is important here is that there is a save button, and this is where confusion sometimes creep in. You save and you go and then you close it and it asks you if you want to save again, and people say no, and then when they open it up, all the information is gone. So let me demonstrate quickly what happens in both of those processes. When I go save on the save button, okay, it'll ask me where do I want to save it. I can choose a name and I can say save, just like you would do normally. I can say yes, replace it, and that's it. So now it is saved, and you can see at the top there the name will confirm, because it will change from the tax tool version whatever to that client. Now what happens is when you close the tool, so when you go close, I want to exit, and you can, whether it's here on close app or whether it's here, it'll do the same thing. When I close it, it says, do you first want to save your data? And then you go like, but I just saved it, so I'm going to click on no. And that's the thing. You must always, if you've got client information in there that you want to save before closing down the tool, or it is information that you want to keep for a client, always say yes. So it will then just go through the same process. You just click on the name and you go save, and then it will be fine. It's when you click no, when you click because what will happen is that the tool will reset. So it will delete all the information that you've put into the tool and save it as a blank file. So very important to say yes and not to say no when you close the file and you want to save it. Cool beans. So let's see. Now other questions, guys. Any other questions that you might have? Wow, I see everybody's here almost. That it's still like 15 people on. Thank you so much. Oh, Russell, welcome. Sorry, I didn't say welcome. Somewhere in between again. And Jonita Doolan. Francis, my favorite from Benoni. Guys, thank you very, very much for being here. If there is any questions, please give me a shout. As I said, you can go to the website and get a free trial. If you have any questions, you can send me an email. You've got my email, the emails that came through from the webinar. So you're very welcome. Thank you, Jolene. It's a pleasure. Enjoy, and yeah, so I'll see you soon. I'm off to a fantastic session that I'm very excited about, and I can't wait to tell you more about that once we are able to do that. All right, awesome stuff. Have a fantastic day, and thank you.